And I was always really interested in how corporates grew and careers of CEOs and sort of executives and etc. Always been an interest of mine. And then eventually when I went to business school, discovered an appetite for finance and an affinity to finance. I really enjoyed that. So moved to the investment banking world and joined, spent 5 years in investment bank and eventually decided I wanted to be a more part of the life of the company and moved in 2001 to the private equity world. So Investcorp's been around since the early 80s and always operating on the same premise of raising capital from a group historically of high net worth individuals, mostly from the MENA region, Middle East, North Africa, and finding investment opportunities in North America and in Europe to diversify their investment opportunities. We've always operated very internationally. So for 35 years, we've always operated. We have a team in North America that invests in New York, that invests in North American opportunities. Team in London that I was a part of for many years that invests in Europe as a whole, and then our team, also a dedicated team to invest in the MENA region. We typically look for control investments and we firmly anchor to in the mid-market. And we define that as companies that have 15 to 50 of EBITDA. That's sort of where our sweet spot is. The other differentiating factor of Investcorp is we operate in a deal-by-deal model, so we don't have a fund. We are structured as a bank, and when we invest into a company, we utilize funds on our balance sheet to make the acquisition, and then we go around and syndicate to a dedicated group of investors for that company. We retain the control and we retain the board. We're on a deal-by-deal model. The performance of every single investment is very transparent to our investors. So we spend a lot of time focusing on the downside protection. We always start with the basics. We look at the industry first, and we like to buy good assets in good industries. We're not a distressed investor, we're not a turnaround type of player. So we always focus with the basics of the industry. Is this a growing environment? Are there strong tailwinds or are there secular trends that will continue to make this industry one that is a good place to be investing capital in? Then we go down one level and we say, okay, well, within this industry, what's the differentiating factor of the company we're looking at? What's the edge? Why are they winning? And is that sustainable over the long term? And once we've ticked those two boxes, we look at how have they been growing, how have they been successful, and growth is a very important aspect for us. So we like to back companies that have a strong growth and earnings momentum. And that growth can come in different ways. It can come from inorganic growth. A lot of our portfolio does a lot of acquisitions, and it's something that we're very comfortable with as a strategy, or organic growth, and that's through investment in sales people, in new products, going to new geographies. We try to leverage our international reach to support our companies, think more broadly, more globally, and we really leverage all of the growth levers that we can. And then we are very traditional, as I said, downside-focused type of investors. So cash flow generation, return on capital is something that is very important to us. And if for some reason that doesn't pan out, we go back to the top and say, well, what's going on in the industry that does not, why is this not cash flowing quite as we'd like it to see it? And then finally, management team. We back management team that we have a good fit with, and we can see them taking us and the company to the next level. Sort of really, our focus is micro driven rather than sector specific or other type of strategies. The fundamentals are the same, and Investcorp has the same investment criteria across all geographies. So the characteristics of the companies that we were discussing earlier that we look for remain the same. Committee, I think we see it often. U.S. asset gets priced more aggressively, maybe than European assets, but it's just a matter of finding the right opportunities. It is a broader market over here, and more intermediated, with more players, just the sheer number of competitors. we've been in a very robust market for the past 2 years. Over the past 18 months, 24 months, we've exited over 10 of our investments, returned $2 billion of capitals to our investors. We've made 8 new investments, so we've been equally active on the buy and the sell. The debt market sneezed a little bit at the end of last year and earlier this year, but we were still transacting in that market. So we haven't seen really a major slowdown. Maybe more cautiousness right now, and definitely more discussions internally around, where are we in the cycle and the type of assets we look at vis-a-vis where we are in the economic cycle. And for 2017, we remain cautious around the broader macro environment. That may create some buying opportunities as well, but cautiously optimistic. I sold 2 of the companies I had we had in our portfolio over the past 12 months. Both have been sold to private equity buyers. A lot of our realizations come from that, and we equally buy a lot from private equity buyers. Definitely, transacting, buying or selling with a private equity fund is very efficient because we are built to transact. So, the decision-making process with a fund, the investment committee meets very regularly, and you don't have to wait for a board to be called, and etc. So it's very fluid and very. It brings more certainty in the ability to transact when the company is ready to transact. This being said, we've also sold one of our portfolio companies to a strategic buyer, and if you positioned, for certain types of assets where we know that there was going to be strategic interest, we try to develop that dialogue way ahead of time. So that particular company, my partners had been talking to the strategics who were potential suitors 18, 24 months ahead of actually transacting. So we try to develop that way ahead of time. We also IPO'd one of our businesses, but these windows, close and shut very quickly, so you just have to be ready. So we typically, when we invest into a company, we really try to know that it's not just going to be a private equity exit, that we hope that there's at least one of the other exit routes that will be open to us. But the reality is each fund brings something, I believe, different to the table, and there are times when moving from one fund to another brings the right things for the management team, appreciate the different types of inputs. Companies are at different stage of maturity, and different GPs bring different sets of skills and capabilities to the table that I think continues to drive value over multiple PE-backed transactions.